Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Thursday, September the 25th. I'm starting off with Frontera Resources, which has been a bit of a charting favourite over the recent past. We've had the extended uptrend line in the RSI window running through 50 at the moment, and that was flagging the idea of a recovery here after the extended basing for the shares above the 200-day moving average at 0.72 pence, which is also the floor of a rising 2013 price channel. Top of the channel currently runs towards 1.8 pence, and that's the target over the next 2 to 4 weeks for the shares. The situation now is that the shares are overbought with an RSI of 80, but at least while there's no end of day close back below the June resistance at 1.14 pence, we have a trade to capture the last stages of the anticipated move here. Any weakness towards 1.14 pence to unwind the overbought RSI position would be regarded as a buying opportunity, with really early sustained price action back below that peak, turning this into a bearish or a bull trap situation. Finishing off with a couple of stocks which are very much bulletin board heroes, and we start off with Gulf Keystone here. There's been an extended consolidation after the gap to the downside here in the end of August. 81.75 was the floor of the gap, and 81.55 was the peak that we've had since then. So that's a gap fill fader, and obviously we've had a drift since then. The best case scenario here is that we see Gulf Keystone shares rebound off this support line from June, which is just below 70 pence. 68.5 pence is the floor there. So really, while there's, if you are positive on the stock, as many private investors are, you would not want to see any break back below that low of yesterday. And obviously, the worst case scenario here would be that the 61 pence floor of August breaks. But at the moment, we give the benefit of the doubt to a rebound and a possible retest, at least, of the 50-day moving average, which has been resistance for the shares in the post-July period. The 50-day moving average is also very important as far as Quindell is concerned. Here, there's also been a drift since since May, with the main breakdown for the stock that we had. It's a sort of triangle consolidation here that we've got. These are normally continuation patterns, which means obviously there's the risk of a new leg to the downside, but there is a June support line running towards the 152 level. That's been double tested to start this week, and there is a chance, therefore, that so there may be some support coming in towards 155. Sorry, rather 150, and the stop loss on that idea would be the £1.38 floor of August. So a difficult situation here at Quindell. Upside here at best, the 50-day moving average at £1.78, which is also the May resistance line. As you can see, over the recent past, we've had the 50-day moving average coming in as resistance on any rally attempt. So what you really like to see to show that the shares have finally reversed in a positive way would be a higher low above the 50-day moving average, which is currently obviously a little way away. That's it for me. More updates at spreadbetmagazine.com.